All right, everybody. Welcome back to the dividend portfolio. Happy Thanksgiving. I should be putting this out on Thanksgiving or maybe the day after Thanksgiving. And here we're just going to give a portfolio update. I'm going to show how to calculate this thing called the weighted return or the weighted average down here. And, anyways, this is not financial advice. I wanted to just show what a dividend portfolio could do over time. I have auto buys on and I'm trying to grow this, but this is not necessarily an the only investing or portfolio strategy. This might be part of a larger strategy, and I wanted to see how this would work and show other people, how it's going. We have made some changes. I made two new buys, which I'm going to go over. So, anyways, it is November 27th today, and in this column here that I'm highlighting, this is the monthly total. I started this in April, so it is a little bit under 1 year of trying to grow this. And then on the left side is the grand total for the year, like the sum. So right now, we have $245 worth of dividends that have come in the month of November, bring our grand total to 1,245 for the year. Assuming next month will be about the same or more, we should hit about 1,500 by the end of the year. Down here, we just kind of showing the same information in graph format. So we like this. The one on the left is the grand total up and to the right, but it's just a sum. So this one's going to go up to the right more easily. The one on the right here, this is the monthly. Right, I'll just maybe just put that in here. This is the monthly. So this has changed a little bit, and I've tried to express the buys and sells, and even we still had last month we had some of these riskier positions. I'll highlight here a little bit. We sold out of these. These were these yield max, um, Alti and Y max, like ultra high dividend, but they have something called NAV erosion, and they usually hit weekly. I mean, these dividends were getting paid out like every Friday. $28, $32, $33 here. Well, we got out of all of those. Here's a $36. And the reason is I basically broke even on these holdings. I'm leaving them here just to show, I did sell out of these. Um, and they were very, very high dividend paying. But the holding of the fund was going down basically as fast as the dividends were paying out, and we knew that was a risk, and I only had them as like 10-15% of the overall portfolio, right? But as I was watching it, and especially one of them, a little bit correlated with some Bitcoin stuff, and I just said, that is not the point of this portfolio. So I sold out of those, basically broke even. I think YMAX ended up being down only about $100, or maybe it was Alti, and so lost a little bit there. But we're not going to see these like super high payouts probably anymore. But that has been the trend for this portfolio, is just kind of going more and more conservative. So we got all out of those yield max products, and there might be a time in the market when they are okay to have, but there might be some stuff where we could be going into more recession type things. I don't know. I kind of leave that to different types of portfolios. Seems like a bad time to be in those, and this is kind of a conservative part of a larger portfolio. So our total probably for the month, I don't know if any more are going to come in before the end of the month, is $245. So if we look at this chart on the right here, um, yeah, we had this $379 in October, but that was still getting payments. We sold at the end of the month, so we were still getting these like really big payments, but the fund itself was going down for those yield max products. So our monthly dividend was 379, but like we're getting these 28, 30, and $30 payments. Meanwhile, the fund itself is dropping equally. Um, so this, and we had a little bit of that back in August as well. So these higher paying monthlies, they're a little bit skewed because we basically broke even on the fund as a whole. Um, Not to beat a dead horse, but so this month will probably be like our one of our best baseline, most normal months, 245, which is higher than the September and July. So I think we are still trending like up and to the right, and I do have regular weekly buys into these. So the fund itself, the total is also growing. It's not just growing from the dividends itself, but I'm going to do a little thing at the end and show, what is the compound of this as well, which is kind of cool to see. So we got this $47 payment, and this comes from SPYT, which I do still really like. It's still, I think this is also like a close-end fund that pays about 19% dividend. It's not one of these big 65 or 100% dividend return type things. But I still really like it, and its performance is holding. So $245. And this, I expect this to go up in December as well. So we'll see if we get back to the $300 a month in December. But next year, it's going to be a pretty good year, I think. So going forward, this chart on the right is just simply all of the holdings and their annual dividend yield. And I'm going to calculate live here. I'll show you how to do oh, I just realized you guys aren't seeing the whole thing. Let me move this over a little. I'm going to calculate something called the weighted average. So what this is, and I bought two more funds after doing a little research. Let me know what you think of them. But this is the annual yield of all the holdings. So we'll see what our average is. I think it's going to come in maybe around 11% or so. But we also do have to do an average. So some of these are more conservative, right? They're getting less than 5%. And then some of them are higher, over 10%. And then we can see the weight in the portfolio on the left hand side here. This is the weight. So this is how much of the portfolio, we can ignore these ones at the bottom, how much of the portfolio these are. So like JEPQ is 8.28% of the whole portfolio. SPYI is 11%. This won't add up to 100. It adds up to 98% because there's a couple like $100 like energy bets in there as well on like nuclear stocks or whatever, but they're really really small and they don't really go into the dividend stuff, but they're really small. So the two new so you can see SPYT right now. I basically moved these YMAX and Alti. I spread them around, but I mostly went into SPYT, which is now 23% of the portfolio. It's probably double what it was last time, which is why I think this $47 payment will be double in December. And that pays once a month. I don't even know if I have any weekly payers anymore. I think I only have monthly payers. Which is fine. Let's go over the performance. So I calculated the performance of all of these so far. I don't know how I'm going to reset this for the next calendar year, but it might just be a running total because I'm not trying to get like too deep into the weeds on this. But as of today, the performance of the fund itself JEPQ is doing the best. It's up 5.65% since I started it. SPYI is up. If you compare this to the last video, almost all of these have gone up. Even the ones that were in the negative have gone less negative. I don't have any that are down more than 1%, which is pretty cool. These ones in particular, JAAA, JBBB, and clause, I'm not expecting to go up or down more than 1%, like overall. And so everything is up, which is great. And the ones that are down are barely down, and they're still paying dividends. And then the new ones that I bought are CSWC, which gets a dividend of 14%, and ASGI, which gets a dividend of a little over 11%. These did not give like a fund. What do you call it? Like a fund fee. They're a little bit different than the other ones that I hold, so we can look at those real quick. This is CSWC, Capital Southwest Corporation, and we can see here, I'll put like a 5-year. It will definitely have more volatility than the like the debt-based funds like clause. However, we can go down here and see, let me move this over a tiny bit. The forward dividend yield says 14%, which is real great. And let's see if we can go to, I think, profile. It'll tell us what they do. They do deal with, it says, the investment structures are types of debt. I think I found this one on Reddit. Senior debt, first and second lien debt. Anyways, you can read they're like involved in manufacturing and services, and I think they invest in different types of like corporate capital. So this is maybe a slightly more like traditional holding or something like that. So that's pretty cool. And I'm liking this. There's some like dividend Reddit stuff where people will, share different funds that they like. And I looked at this one and I thought, I could add this in, and the weighting, like because I just bought them, the weighting is less than 1% of the portfolio right now. Long term, I want to get these more and more balanced, but I do still like SPYT a lot. And then the other one is ASGI. So ASGI is an income fund, Arbordin Global Infrastructure Income Fund. So we can see here on the right, it says forward dividend yield 11.54%. And yeah, there's another high yield over 10%. And let's go to the profile. This might be newer. Yes, this is description not available. So you can read about this if you want. It does have like a lot of news, but I think this hasn't been, okay, this has been around a while. It's kind of at a high point, so it could drop back down. Buying into funds when they're at high points is not always the best, but we're here for the dividend, and since I've held it, it's both of these have already gone up over 2% just from the holdings that I have, which is cool. So that's what's going on with the fund. Over last month, I dropped these, and these are the two new purchases that I've made. So that's everything. I'm going to I'm going to recalculate this thing called weighted average, which is going to take the weight in the fund on the left side here, and then it's going to take the annual yield and take into account how much is weighted in the fund to get a weighted average, right? So it's going to take all these different annual yields and then say, okay, well, this is a high yield, right? 14%, but it's less than 1% of the portfolio. So it's going to take that in account. So the next part of this video, I'm just going to calculate that to show you how it can be done. And then lastly, I'm going to show, so we have all these dividends coming in. They're buying back into the funds. So what is the current compounding effect that we're getting? So I'm going to show that at the end. So how are we going to get this weighted average? I think there's more than one way to do it. Let me move my screen a tiny bit. So the old weighted average was 22%. And that kind of seems high, but I think I was including YMAX in that as well. Can't remember, but we don't have these anymore, so we'll see what the new weighted average is. I'll be surprised if it shouldn't be that. It can't be that high. So how am I going to do this? There is a website called rapidtables.com, and they have, I don't know if I can move this. They have a weighted average calculator. So this will take a couple minutes, but I want to show you how you can do this. So what we're going to do is we're going to take the yield and then put in the weight. So the data value is the yield, and I'm just going to start from top to bottom here. So start with JEPQ, and it's 10.2%, and then the weight I have is 8.28, SPYI 11%, and the weight in the portfolio is 11.66. Going down 13%, and the weight is 6.98, 9.4%, and the weight is 3.61. And just give me a minute and I will put all these in. I'm not going to show this every time, but I am going to rebalance this for many of the videos, but I'm not going to, I just want to show you how this is done. 1.94 for SCHD, and the yield. Oh, see, I already got one wrong. 9.4. To back up a little bit. 9.4 should be 3.61. Okay. 8% yield on JEPI, and the weight in the portfolio is 9.8. These will add up to close to 100. I think it can calculate even if it's not perfect. From when I did this before, I think it didn't have to be exactly perfect. The yield on SCHD is 3.7, and the weight in the portfolio is 1.94. 3.2%, and the weight is 3.01. 5.4% on JAAA, and the weight is 8.79. Here's our SPYT, which is 19% yield, and the weight is 23.02. It's a pretty large part of the portfolio. Yield on J triple B is 7.2. Weight is 4.7. 7.4 is clause, and that's 11.87. I read something that people online were saying that clause and J triple B were at big risk if we go into a recession. And there were some debates about that, but I guess we'll see. All of these have, all investing has risk, and all of these have the risk of going down if we go into a bigger recession, but they should go down less than just holding the overall market. But again, that's why 14.84 and then 11.54. That's why I want to be diversified. And okay, so I don't know if these add up to 100, but should be pretty close. And let's hit calculate and see what we get. So yeah, this says the sum of the weights is 98.6%, which is about what we got before. And then this says the weighted average is 11.21. So this is taking all of these different yields and then saying, how is this weighted in the portfolio? So our total with everything comes to 11.21% with all of these together. So if over the next year all of these drop 11% over the entire year, but they're all together paying 11%, then that would still be like a break-even year. So that's the weighted average we currently have. Now the last thing, I have this compound interest calculator that is pretty cool for seeing like where will this go. But what I want to do is show our grand total coming in for the year. Let's just assume that this is 250 for December. And all of these are buying back in. So with the calculator here, we can take, let's say, at the end of the year, we bring in $1,500. And actually, before I do this, I'll just say, because we had these outsized dividends that I don't think we're going to see anymore, let's say our average monthly for next year is 300. We'll do 300 times 12 months. Well, that still says next year we should have $3,600 coming in. So that's pretty cool. That's from the regular buys and growing this. But anyways, so this says we probably will bring in 1,500 this year. Now, that's all the dividends that have come in and bought back in to their respective funds. So how the compounding, this is the way I see it, is what's kind of fun is, so that is all payments that have come in, bought back in to their funds. So this $1,500 is how my investments have worked for me this year. Since they're buying back in, they're also going to then work towards more dividends. So if I take this weighted average return of 11.21%, what I want to do is I want to say, okay, so $1,500 times 11.2% is $168. If I did nothing else and I didn't buy anything else next year, to me, what this is showing is that all of the all of the dividends that have come in are now compounding. They're working harder. So this $168 is how the money is compounding, and this $168, potentially for the next year was just my money, my investments now like working even harder. Um, and this would be what the dividends themselves are now producing. And what I like to do is then do divided by 12. So what this is saying is this is now bringing in an extra $14 a month that wasn't coming in before, which is kind of interesting because, I started this back in April, and by the end of May, my total dividends were 15.46, or about $15. So to me, what this is telling me is that um, all of the compounding alone is almost equal to the total dividends that I brought in just in May of this past year. Um, if we really do get 3,600 for the next calendar year, then we can do the same thing. So I'll do times the 11% 0.2 yield. This is telling me that that additional compounding for the next calendar year should bring in $400 for the year. I'll do divided by 12. And this is telling me that the compounding effect for all of next year should be around $33 just from my money working for me. At this $33 a month next year is like the compound effect, which is pretty cool. That's basically $1 a day, and that is pretty cool. So that's the portfolio update. And yeah, once again, thanks for following. We picked up 2 new funds. I do want to grow these. I think that, overall, I want to do a little bit more risk assessment on these, but they seemed good from when I looked at them. And as the weight in these goes up, our weighted average may go up a little bit. And yeah, otherwise, thanks for following. And we're almost at the end of the year, so I'll probably, save all this for the records, and then next year we'll be able to start with what we got. And I don't know if we'll hit the $300, like $300 a month kind of goal for December, but I think we're going to get pretty close. And that's exciting because, yeah, if it was $300 a month times 12 months, that's $3,000 $3,600 for the next calendar year, which is pretty cool. And then at that point, that's going to speed up the compounding snowball, if you will, and this number, um, yeah, will be double for next year, which is pretty cool. So, anyways, thanks for watching, and if you know any other funds that I should look at, it was fun to finally find these two at the bottom here to add to the portfolio. If you know any other funds that you think are good that maybe I could add to this strategy, maybe let me know what you think.